Hello, everyone, and welcome again to another episode of this weekly Outlook series. And as always, just like clockwork, we start every week the same, no difference. Stick to your protocol, always. So, here on this week, I've included the Sunday just to remind people if they haven't already that it is daylight savings time if you're not in America or whether what country it is. Um, just pay attention to the time zone changing. So, yeah, on Monday, we don't have any news, and due to the current events happening in the world and where specifically price action is at right now, even if this wasn't a regular Monday, now that I avoid trading on Mondays, just so I can get a clearer picture of what the weekly out outlook might be after Monday's price action, this would be one of the days where I would still wait. Specifically, just because of where price is at right now. So Monday is a no trading day for me, which is also why I'm releasing this video just a little bit later than usual. On Tuesday, we don't have any high impact news or medium impact news for that matter, but I will still be trading as usual the third quarter of the New York AM session. On Wednesday, we have CPI, and normally I would not be trading the day before CPI to avoid certain things that I used to adhere to, but now with my current protocol, I do trade the day before CPI if my model is present and everything is aligned, I will be taking a trade, regardless if it's the day before CPI, NFP, or FOMC now. Um, this is one of the things that you have to get good at where it comes to environment recognition. Even though I show up to the charts, doesn't mean I would be taking a trade or not taking a trade. So learn to really master your model and master your protocol, and then just let your risk to reward handle everything else. You're going to win some trades, you're going to lose some trades. It doesn't necessarily matter what order they come in, as long as you have your risk to reward that's backing your specific strategy and model based on your win rate, right? That's where journaling comes into hand and having all your data present to see what specifically works for you. But that's another video that I can probably go into later. On Wednesday, again, we have CPI news at 8:30 a.m. I will be letting the news play out and waiting for the 9:30 open before taking any trades, preferably around the 9:40 macro. On Thursday, we have unemployment claims, which is one of my favorite days to trade now. Unemployment claims at 8:30 news. I'll be waiting for the 9:30 opening to execute on any trades as well this specific day. And on Friday, we have GDP and the job jolts that I'll be paying attention to. On this specific day, I'll be waiting for the jolts news release if I take any trades on this specific day. So that news release is at 10 a.m. your local time. And after that news release is set in stone, then that's when I'll be looking to execute, preferably around the ending of the third quarter and the fourth quarter of the New York morning session is probably the best time to look for something and start to attack. And waiting for the true macro session open of the fourth quarter would be even better. So now let's go ahead and show you guys the earnings report for this specific week. There's no Magnificent Seven stocks on the calendar for this specific week, so I won't be really paying attention to any of these earnings, even though some of your favorite companies might be in here. So the next website I will be showing you guys is a little tool that I use because this is the expiration month for the Nasdaq contract for this specific contract. It ends on March 20th, right? So when we're coming closer to that specific date, it's kind of hard to tell if you're not in the knowing or if you haven't heard of this specific website before. It's hard to know when to switch over on the contracts, right? So I'm gonna show you guys a website that I use. All right, so here we are on the cmegroup.com, and this is their, if let me scroll up just to show you guys real quick. This is the Nasdaq futures, right? 100. It shows you the volume and open interest. This is something that ICT showed us before, and I'm just showing you guys just in case you haven't watched any of his 1,000 videos, because he literally has 1,000 videos. So now here we are on the March 2026 contract, right? This is all the volume and orders pretty much and everything happening in that specific contract. And then these are the next contracts that are going to be following it, right? Or whenever this specific volume here, the total volume here is less than the volume for the June contract, that's when you switch, right? On the rollover weeks is what they call them. Price action tends to be a little non-favorable to be professional, but yeah, price action tends to suck those weeks. So, um, and then this is kind of why, where you can see the total volume for both contracts because they're literally switching over their trades to the June contract. So yeah, that's just a little tool that I use. Whenever you see the volume here being less than the following contract that's after it, which would be the June contract for the Nasdaq futures, or whatever futures that you're specifically looking at, you go ahead and find it on this website. If it is a futures on the CME website, if it's a US futures, come here, look at the total volume. Whenever you see that the current contract has less volume than the following contract, that's when you should be switching over to the next contract. So now let's go ahead and get into the charts. All right, so here we are on the daily time frame for the Nasdaq futures, and we have had a pretty decent sized New Week opening gap, as you guys can see, due to all the fuss around the world. Now, this is still my invalidation of the buy program. This is another reason why I want to wait for this daily candle to close to tell me what it's going to do, right? Because it can still close inside of this range, which would be nuts if it did. But hey, I'm gonna let it do what it needs to do. And the buy program technically would not be invalidated, and a new buy program would be starting, right? So now there's one thing I want to point out here. We do currently have quarterly SMT with ES and the Dow Jones at these lows. Do I expect those to hold? I don't really have any favorable signs here. At the current moment, I'm just waiting for price to tell me what it's going to do. If the sell program is indeed in, right, and we do get this closure below this range, and this quarterly SMT, let me say that again. If this quarterly SMT gets invalidated, then my next targets are the September low and the price range of the 23,000 range. Literally that's it, which is why I'm going to wait for the daily time frame to tell me what it's going to do. Now, at the current moment, this is a discounted price range for all the futures contracts. They all are in a specific point of interest where if they want to form a low, this is a specific area where they can do it. Now, combine that with quarterly SMT, and then combine that with the things that are happening around the world, and everyone is thinking sell, 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 sell. And we see all of this accumulation here that we just had for this past, basically all of February. The same we had here, accumulation, manipulation, and then distribution lower. We've had another accumulation here. We do have a bunch of SMTs at the highs, right? That could be the manipulation, and this could be the distribution. But if point A to B has already been reached and is being reached with quarterly sequential SMT at a discounted array, and everything is also at a discount, meaning the ES and Dow Jones are also at a discounted rate, then I wouldn't be surprised if they form a low here. But I'm not saying that. I just would not be surprised if they decided to do that. So, just to give you guys a point of interest, pretty much, we have these volume imbalances here, which if you look at on the continuous contract, it looks a lot better, but this is the most accurate contract you're going to get every time you're trading. The continuous contract is slightly different than the actual March contract or whichever month you're looking at, whether it be June or the December contract, for example. These are going to be the most accurate ones. Every time you're trying to study price, these are the most accurate ones. And I would basically be just paying attention to these volume imbalances. And there is a fair value gap here with this 1, 2, and 3 candles here. And the invalidation of the basically of these fair value gaps here would just be this low here. but because of how spaced out this is, I just go ahead and highlight that bottom of that candle as well. Bring this over, and there you have it. This is the area that I'll be paying attention to for my discounted rates. And if you didn't know how to move your drawings to the back of the chart, I just showed you how to do so as well. So yeah, on the daily time frame, guys, this is basically what I'm paying attention to. And I'll go into the 1 hour as well, just to give some more precise areas to pay attention to after Monday's price action has already told me what we're going to do for the week. But as long as we keep this quarterly S&T intact and we don't displace through this area, or if we close inside of this new week opening gap or inside of this area that I have highlighted here, then I would expect the buy program to still be in play. But with that being said, if we do close below this and then ES and YM also invalidate this SMT, then it is be very, very obvious to me that we're going to use this specific area as resistance, close below, come back to it, and attack the September low, and even further after that. So those are the two scenarios that you need to be paying attention to this week. To me, the scenario that would probably trick more people, which would be the buy program happening now during all this stuff happening in the world. This one, in my opinion, will trip up a lot more people. But let's go ahead and look at the 1 hour time frame real quick. So here we are on the 1 hour time frame, and as you guys can see, we came right to that 24,000 range and immediately rejected it. Right, alone that means nothing. We do have the quarterly SMT. Now, I want to be paying attention to specifically on the 1 hour time frame. If we come and scroll here, this candle on Thursday, February 5th at the 19 o'clock time frame or hour, not time frame, excuse me. The 19 o'clock candle on the 1 hour time frame. If you take that rejection block and scoot it over, you get this point of interest. If the buy program is going to stay in place, and we start to see the Nasdaq close above this, use this as support, and then close above the new week opening gap, then to me, that would be more leaning on the side that this move lower was just the manipulation, and we're going to come back towards all of these highs here and back into that daily busy. But like I said, I'm going to let Monday do what it's going to do. If that stays intact, and then we are just bouncing around these ranges, then I would favor more on the sell side part of things, or where we fail to close above both of these points of interest, or we only close here and then come to the new week opening gap, form some sort of sequential SMT inside of the new week opening gap, and then start to close below this, then this same range is going to be used as resistance, like I said, to continue lower. And then these same points of interest that I've had on my charts now for a few weeks can still be used as areas of interest to seek higher price. But for now, those are the two scenarios. Good luck and good trading.